And as the president of the Minority Contractors Association, our objective is to help our fellow minority contractors and our members and introduce them to opportunities and resources for their companies. One of our key objectives is networking and bringing those opportunities as we're becoming more known in the market. We are getting contacted by other contractors, larger contractors, to either support the organization and they're looking to partner with our members. So we share a lot of different opportunities with our membership, but the key goal is getting ready for the opportunities, because a lot of these large contractors have larger opportunities, and they have DEI plans as well and goals. And so they're looking for contractors that they can work with and that they can help scale so that they can do some of their work for their projects. This is becoming very active communications with these larger contractors. So the membership is one that we started a little over a year and a half, and we're continuing to grow the membership and present these opportunities to our members. We are a 501c6 organization, which means that was designed that way so that we could advocate for our membership and advocate for more opportunities, which is the things that we'll be active in with city and county and state government, is to increase their procurement for minority participation and help and assist and guide them with that, how to go about increasing that participation and connecting our members with those procurement departments. You want to go to the next slide? We have a board of directors currently, as you see, myself, Juan Robinson, John Hilliard, and Jahira Morphonius. This is our executive board, and we put most of the objectives and directives together through feedback from our members, is how we build most of our directives and objectives for the organization. I would like to talk a little bit. I'll share, Donovan's sharing our link if you are interested in either emailing or contacting us for information. Also, our website is where you can go and get more information, and also you can join from the website. I'd like to talk just real briefly about our subject matter expert, what we're going to be discussing here. And as far as the credit goes, I do know personally that your credit is key to a lot of your success when you are in business, from start, ongoing, etc. When it comes time for you to finance opportunities, or you want to get a line of credit, or vehicles or equipment, your personal and business credit will be reviewed. So we felt like the subject matter was important for those who want to grow their business and scale, and also be able to manage multiple projects at once. You need to be able to have some credit, or have good credit to be able to do these things. So I want to thank Jeff for being able to make himself available and share his credit knowledge on credit.
All right. We'll go ahead and get going. Eddie, Donovan, thank you, the both of you, for having me on. And I'm excited to be able to share some information that was shared with me. Again, Jeff Johnson, background, entrepreneur, business owner. I've operated traditional and non-traditional. Also work in the community. I coach youth basketball, both middle school and on high school level. Coach my son's 8th grade travel ball team, and I also coach at Atherton High School here locally. And my goal is to help empower 1 million people as entrepreneurs and 10 million people to become financially free and homeowners in marginalized communities. And credit is a tool to help accomplish that. The definition, I read a book called Speed Wealth by T. Harv Eker, and he wrote his definition of financial freedom is to have enough income coming in from passive income producing assets to cover your monthly expenses. So if you're making $3,000 a month passively from vending machines or real estate, or rental properties, or or dividends from stock, it doesn't matter. Money coming in whether you're there or not. That's his definition of financial freedom. Credit is a tool not just to purchase a home or a vehicle, get a credit card, but also to buy income producing assets such as those rental properties, those things for your businesses themselves. And so it I operated a traditional restaurant franchise and put a lot of my own cash into it. And as I became more and more educated on the world of credit, I saw these major large corporations that had inventory that they were getting with lines of credit instead of putting their own cash into it. And so if something happened to that company, if things didn't go too good, they could always reset and not have to forfeit their own cash. They used the bank's money to do that. And so we weren't really taught that in school. I was taught a squared plus b squared equals c squared, the Pythagorean theorem, or Pythagorean, however you pronounce it. But I wasn't taught. I don't know about you guys. I have not used that since graduating. But I know we have engineers, contractors, but I wasn't taught the data points needed to structure your credit profile, and that's a formula that everyone is using. And if you're not using it, it's using you by not knowing it. Recognize that personal credit is what's needed to be even get in the world of business credit, business lines of credit. Most of these lenders, they want you to have establish yourself as a personal guarantor. And so what is credit? And for folks that are maybe not are familiar or don't know exactly what it is, credit is just the ability to pay your bills on time, over time. All right, and I'm going to repeat that again. Credit is the ability to pay your bills on time, over time. All right, and just in the chat, if we could, just so I know who I'm sharing with. I know this is being recorded, so there's going to be some folks listening in that are going to get this information as well. But if you could put a 1 in the chat if you know someone that may have less than perfect credit, meaning you have a score probably below 750. So if you know someone with less than perfect credit, if you could put a 1 in the chat. Okay. Now, if you know someone really good, like maybe you look at them in the mirror in the morning that may have less than perfect credit, if you could put a 2 in the chat, right? So if you know someone very well that maybe in that situation, put a 2 in the chat if that's you. And no shame in it at all, because we weren't really taught this in school. I feel like it was intentional, so we'd have to pay higher interest rates. But by the time we get off here today, you're gonna know how to make sure you have the best credit rating possible. Okay. All right. So why is credit important? Here's the thing. People say, I pay cash for everything. All right. I don't need credit. I pay cash for this. Cash is king. Well, actually credit is. All right. If you look on the dollar bill in your wallet or your pocketbook right now, on that dollar bill, it says Federal Reserve Note, right? What is a note? That's an IOU, right? That is a line of credit, right? So what that means is, right, this whole society is a credit-based society. And it's either you learn the game of credit to play to win, or you get played by the game, right? So credit is important because here's the thing. The highest credit score you can have is an 850. The score that we need to get you to is a 750 plus. And it's not even really the score. And I encourage you to jot this down. It's the rating of your credit profile, how your credit profile is structured. You can have a score and still get denied. You can have I've seen folks with 750s, 800 still get denied because their profile wasn't set up properly for that approval. The highest rating you can get is what's called an excellent. there are a number of different ways different companies and institutions calculate your credit score. They use slightly different formulas. So if you're going for a mortgage, it's different than for line of business credit, or that credit card, or maybe an apartment, or a vehicle, right? But typically, if you have the following data points that I'm going to give you here in a few minutes, right, you should be solid at a 750 plus across the board, because you're shooting for the rating, which is excellent. You want to have an excellent. If you're an excellent, you'll get the best rates and approvals on pretty much everything. All right. If you don't have an excellent, over your lifetime, you lose about $250,000 to $1 million. All right. 250,000 to $1 million. Who would like to keep that in your wallet? All right. If you could type a me in the chat. All right. Just so I know who I'm dealing with. If you'd like to keep $250,000 to $1 million, that's a business. That's a property. Right. Those are materials. Right. So you want to make sure that you get that excellence, because you're losing that 250 to $1 million. You're losing it on higher interest rates. You're paying unnecessary deposits for contracts and utilities. You're getting turned down for jobs and promotions, right? You're paying higher car insurance and insurance rates. I know Kentucky is one of the worst states to have bad credit. If you're looking to get auto insurance, you're paying extra $1,000 or $2,000 or more a year. Getting turned down for homes, vehicles, all those different things, not getting the rates you want. That's why we need to get you to excellent. Okay. So here's how we do that. So I encourage you to jot this down, put it in your phone, save it, because I don't want you just to get on this webinar and you hear some good info and then we're off and then we forget. No, this is very important to leverage yourself generationally. All right. I read in a book one time, it said a good man leaves an inheritance for his children's children. All right. So what are we leaving behind? Credit is just a way to leverage the amount of assets that you can leave behind. So I encourage you to make sure you jot this down and keep it with you. Make sure everyone in your household, in your circle, has this information. Okay. So here are the data points to have yourself structured for that excellent rating as of now, April 2022 to 2022. Right. That it could change. Lending guidelines could change. But it's been this way for quite a while. It probably will be, this way as well. If anything changes, and I'll put my info in there. You can reach out. All right, because I'm constantly studying. But here's the formula for an excellent credit rating, 750 plus. Okay. So first thing is you want to make sure you have 0 negative items and 5 active credit accounts. Okay. So that's 0 negative items and 5 active credit accounts. Okay. Also, you want to make sure out of those 5, at least you have 1 active credit card and at least 1 active loan. Okay. 1 active credit card and at least 1 active loan. And I'm going to keep repeating it because I know you guys are jotting it down. Right. And I'm going to go break down each point as far as why it's important. Next, make sure on that credit card, you stay between 1 and 7% utilization on those credit cards. Okay. Make sure on the credit cards, you stay between 1 and 7% utilization on those credit cards. All right. Next, you want to make sure that the average age of all of those accounts, all of your 5 plus accounts, all of your 5 plus accounts is 5 years or more. Okay. Average age should be 5 years or more. Okay. Next, you want to make sure that you have no more than 3 credit inquiries, depending on which part of the country you're from. All right. No more than 3 credit inquiries. Okay. So I'm going to repeat that formula. All right. 0 negatives, 5 active credit accounts, credit cards and loans, at least 1 of each. Stay between 1 and 7% utilization on those credit cards on that statement date. Average age 5 years, no more than 3 credit inquiries. Okay. So here's why those are important. Okay. The biggest thing that impacts your credit score is your payment history. You don't want, if you're going to a bank and they're looking to approve you for, let's say, $50,000 line of credit, $500,000, $5 million, or a home for $400,000 home, you don't want anything on that credit profile to discourage that lender for, from loaning, that amount, right? So you don't want any derogatory, delinquent items, no collections, no late payments, no missed payments, no medical bills, no charge-offs, no bankruptcies, no repos, no voluntary repos, no evictions, none of that information. You don't want anything on there to discourage them, right? Because that's 35% of your credit score. So if you look at the 750, that's roughly 250 points out of the 750, actually more than that, right? So it affects more than any part of your score, your payment history. So make sure you have no negative items. Now, a credit repair process can help with that, and I'll go into that in a few moments. But also, beyond just the negative items, right? You need to make sure you have 5 active credit accounts. Okay. If you don't remember anything else that you hear this evening, remember this: we need to take off all the bad stuff, which is obvious, but also we need to put on enough of the good stuff and allow enough time to kick in. Take off all the bad stuff, put on enough of the good stuff, and allow enough time to kick in. Banks want to see that you can actually handle credit. They want to see that you can handle more than one credit account. Right? The magic number as of right now is 5 accounts. That's what they call a thick credit profile. Okay. For a home, I work with a lot of loan officers. Bare minimum, they'll get you in a house with about 3 active accounts. But if you want to get the best rates, you want to have about 5, because that's a thick profile. Okay. For a home, you can get you can get approved. I've seen as low as 580, 620. If along the way in your credit journey, you're able to get your foot in the door and get the house, do that. But then, keep strengthening your profile to an excellent rating. So 6 months to a year from now, whatever, you can refinance and get a better interest rate and save thousands of dollars. Okay. But you want to make sure you have 5 active credit accounts. Banks also want to see that you can handle different types of credit. They want to see that you can handle credit cards. They also want to see that you can handle loans. That difference, that's called your credit mix. That's 10% of your score. So out of 750, that's 75 points that are affected by making sure you have both those types of credit represented. Okay. If you don't have 5 active credit accounts, in the chat, I just put a list of several different accounts that you can utilize. Some of those are free. I put it in a kind of a brief description on how to set those up. And then some of them are, if they're not free, they're close to it. So hopefully you guys can see that. If not, I'll put my info in there. I can break down each one. But you want to make sure you have 5 active. Now, let me break down credit card utilization. You want to make sure you have a credit card, because credit cards affect your credit in more ways than one. I always heard, stay away from credit cards. Pay for everything in cash. Use your debit card. If you're building a credit, you don't want to do that. You want to make sure you have at least 1 active credit card, because it affects your credit in several of the different factors of your score. It affects your credit card utilization percentage. That is 30% of your points, credit card utilization percentage. So out of that 750, we're talking 225 that's affected. All right. So you got to have a card and you got to use it the right way. All right. You want to make sure you have a card and make sure that no more than 7% of your limit has been used on your statement date. Okay. Your statement date is the day that your credit card company reports their data to the credit bureaus on how you're using your credit card. All right. If you have more than 7% used on your statement date, it makes you look desperate for cash. So let's say you have a card with $1,000 limit on your statement date. If you haven't paid that whole $1,000 off, you want to make sure it's that you owe, or you have not spent more than $70 out of that $1,000. Because if you spend $1,000, if you spent the whole $1,000, a bank looking at you for a loan is like, they're like, how can I loan you this $200,000 and you spent the whole $1,000 on this credit card, right? So you want to make sure you have a card reporting, make sure you're using it the right way. If your score is lower, like if you're in the 500s, or you want to make that you get the card. Now, you're probably not going to get approved for the better cards. Not all credit cards are equal. The higher your credit score, there are some good cards out there that give you points and rewards and give you free gas, free utilities, free groceries, free clothes, free flights, free vacations, depending on the card. When your score is lower, you're probably not going to get approved for those. So don't apply for them yet. Keep pushing for that excellent rating, get your profile set up. But you can use what's called a secure credit card, where you take your own cash, put it on the card. That becomes your limit. Buy something once a month, at least once a month. Buy something you're going to buy anyway, like gas or you pay your cell phone bill, or if you have Netflix, put that on there. You can set it for auto pay. You want to make sure you have at least one transaction once a month so they don't close your account due to inactivity. Okay. But buy something and let those expenses you're buying anyway go ahead and build your credit profile, build your credit rating for you. Okay. Don't buy things you're not already buying. Don't go crazy at the mall or Amazon or anything else. Right. Just buy something you're going to buy anyway and let those expenses build your credit profile for you. So you get the card, use it the right way. Next thing, credit age is the third biggest thing that impacts your score. It's 15% of your points. So out of a 750, that's a little bit over 100 points being affected, right, by the age of your accounts. The longer that you've had accounts open and paid on time responsibly, the better you look. It's like if you needed foot surgery, right? Hopefully you don't need surgery on your foot, on your big toe, right? But if you did, would you rather have a doctor who's been practicing, been licensed a year, or would you rather have one who's been practicing 5 years? Obviously, it's the 5 years, right? All right. So, it's the same thing. Banks look at you the same way. How long have you had that credit card open? How long have you had that, that particular account open? The longer, the better. Typically with the house for a mortgage, they want to see at least an average age of a year, but the magic number is 5 years. Okay. That gets you the best rates. Right. So with credit cards, this is another reason you need a credit card, at least one. Make sure you don't close your credit cards. You can have a credit card like a mortgage, 30 years. Right. A car note, you'll pay that off in 5 years. Personal loan, you pay it off usually in a couple of years. So when they get paid off, it drops off and it doesn't count for your age. All right. And that drops that part of your score because that loan is coming off. But the credit card, if you've had 5 credit cards that are 10 years old each, and you have one loan that's only 2 years and it drops off, you won't have a big drop off in your average age amount. Okay. So, ultimately, once your credit profile gets better, and you get to the excellent rating, you'll get those better credit cards, and just put a separate bill on each card on auto pay, and just keep those cards open. Just have one transaction once a month, and that way your average age will stay up. Your credit will fluctuate over time. You'll see little dips and things, kind of like your weight. All right, kind of fluctuates over the course of the year. Summertime, we're looking good. Wintertime, we're eating, right? November, Thanksgiving, the holidays start, all that. And then you pick up those 10, 15 pounds, and then springtime comes and you lose them again, So credit's the same way. You're going to see little fluctuations over time as you pay off loans because you have to pay them. The payment history is the biggest part of your score. So you have to pay them. So they will get paid off. And then that age from them, from those loans will close out. But if you keep your cards open, that'll bring up the average age. And then next is credit inquiries. Okay, new credit. That is 10% of your score. So out of 750, that's another 75 affected by making sure that you don't have any more than 3 credit inquiries within a 2-year time frame. All right, 1 or 2, it's not that bad, but over 3, it starts to tell a story on you. And the story is that you're desperate for credit. All right. I remember in high school, I had a friend and, he tried to date a girl and she said, well, why didn't that girl like you? Why didn't this girl like you? Right. You got turned down. Right. And so, it's the same thing. You want to make sure that you don't look desperate for credit. Okay. To these lenders. All right. So you want to keep it below 3 in a 2-year time frame. If you do have more than 3, or if you have negative items, they can be removed. Okay. They can be removed, and we'll go over that in just a second. But again, 0 negatives, but also 5 active credit accounts, credit cards and loans, at least one of each. Make sure your average age is 5 years, credit card utilization between 1 and 7% on your statement date, and then no more than 3 credit inquiries. Now, let me give you a few accounts because I'm not showing it in the chat. If you have no credit cards, there's a secured card you can utilize. You make a deposit, that becomes your limit. After a few months, they actually give you your deposit back. So it graduates to unsecured, and it gives you extra points and cash back as well. There are rent reporting programs that actually report your on-time rent payments to the credit bureaus. There are what's called credit builder loans, where they use those CDs that you get at the bank, certificates of deposit. They're pretty much savings accounts with time limits. And rather than putting your own cash in that account to build interest over time, they give you a loan and you make payments of like $15, $25 a month. Every month that payment is recorded at the credit bureau, it builds your credit score. So I had a client that had one of those, and their score went from a 514 to a 594, jumped to 80 points when their first payment hit. And then when the 2-year time frame hit, they got their money back. So it's like a savings account builds your credit. Okay. And so there's a number of different accounts that are either free or very low cost that you can use to build your profile to an excellent rating, and then you can start applying for the better credit cards and the mortgage, all the other things. Okay. Business credit. All right. Most lenders want to see you with a personal credit score of at least about a 680. Really, they want to see 720. So if you utilize the data points that I gave you, it'll get to shoot for that 750, that excellent credit rating. It should have you credit wise, it should have you more than ready. Okay. Also, it'll have you ready for those good credit cards, the mortgage, vehicle, all those different things. Let me talk about how we get the bad stuff off. If you have negative items, if you have too many credit inquiries, okay, credit can be rebuilt, repaired, and restored. There is no credit hell. You can come back. Okay. There's a law called the Fair Credit Reporting Act. That law says that even if you owe a debt, you have the right to dispute anything that's on your credit report that's negative, that is inaccurate, obsolete, or unverifiable on your credit profile. Okay. Anything that's on your credit report that is inaccurate, obsolete, or unverifiable, you can have those items disputed. Okay. And it is then up to your creditors, the people that you owe. It's their responsibility to prove everything. They have to verify that you owe the debt down to the penny. They need the original contract with your wet signature. They have to verify that your information is correct, like the spelling of your name. How many of you guys have seen your name spelled wrong? All right, or you're a junior, or the second, or you have an old address. Maybe you looked at your credit report and you got 10 addresses on there, right? That has to be updated, or it has to show the correct information. Also, they have 45 days or less to respond back when you file the dispute. Okay. So what we do is we pull your credit report to identify the negative items on your Experian profile, your Equifax, your TransUnion, put them on a dispute letter, and they have 45 days and they have to abide by all those guidelines when we mail the letter to them. And if all those guidelines aren't met by your creditors, they have to take that negative item off and put in the chat. If they take that negative item off, what do you guys think can happen to your credit score and your credit rating? I put that in the chat. Donovan gave me thumbs up. Okay. Yeah, absolutely. Your score can go up. Okay. So we create the letters. We have a team through our nonprofit to facilitate that. We send the letters to you first because you need to sign them. And you also need to attach a copy of your driver's license and your social security card, because the bureaus do verify your identity. And they also want to see that it comes from the consumer's address. So that's why we send it to you. You'll then drop your dispute letters in the mail to each bureau. And at that point, just for the mail's sake, I would give it up to 60 days, because they have 45 for the investigation. Give it about a week to get there and a week for them to send you correspondence back as far as what happened with your dispute of those negative items. We dispute all the negative items at once. It doesn't matter if you have one negative item or 100. We dispute everything at once so you can get a faster result. We don't drag out the process. Okay. By law, you're supposed to receive a copy of your credit report back from each bureau. It'll show you how many negative items are still left. Okay. If there are any negative items still left, you'll send that credit report back to us and we'll make a new dispute letter to dispute those remaining negative items. Okay. And we'll just repeat that process over and over again until everything has been removed. I tell my clients to be patient, because if it took 12 years to ruin your credit, I don't care if it takes 12 months to fix it, or 3 months, or 9 months. You'll give it at least 4 rounds of disputes, which is about 6 months. I've seen folks get it done in 30 days. I've seen folks where it took a year just because they had more accounts. My son's football coach, Coach Reed, he had 60 negative items when he first started out After a round of letters, 50 of those 60 came off. And so he had 10 remaining. So we just sent out another round of disputes for him. All right. So it's different for everybody, because it varies based upon how many negative accounts you have. Also, who have you done business with? Some accounts, some companies will fight back harder. Okay. And we also include some other services as well. A debt reduction program to help you pay down debt faster, a budgeting program which will help you avoid late payments, a savings goal program that helps you get ready for big projects like a down payment on a house or something. A number of other different tools as well. We also provide a portal, and an app that you can access right from your smartphone or your laptop, your device, so you can check your progress. Okay, I put my number at the bottom. If you do need help with your credit profile, if you don't have zero negatives, maybe you have 1 0, so 10 negatives, or maybe you have 1 0 0. You got 100, like a couple, some of my clients last week. That's fine. We can help you. Just reach out to me. If you don't have 5 active credit accounts, we can get you some accounts as well to help build out that profile. Even have some free accounts. Even have some free accounts that pay you to build your credit. That's pretty good. Free and put money in your pocket to help you build out your credit. What I generally do is I do a consultation by phone appointment, so I can break down your specific situation, because you may not need everything the next person needs. And so if you don't need it, I don't want to steer you in that direction. So I want to make sure we get you exactly what you need to get your credit profile together and get you approved for financing and funding. So now I guess I'm going to turn it back over to our host, or if there's any questions, I'm open for questions, but I appreciate being on the line here.
Thank you so very much, Mr. Johnson. We do have a question in the chat. We have from Ms. Casey Martin, or Mr. Casey Martin, can you speak on business lines of credit?
Yeah, so I focus on personal credit. I do have some vendors that I work with that do focus on the business lines of credit, and it kind of depends. Structuring that depends on what your needs are. That's why they kind of do it by situation, because certain accounts would not be appropriate for certain types of needs and certain types of businesses. All right. So if you reach out, we can set up a consultation to see exactly what you need, because we don't want to put accounts on there that are not going to help your business. Okay. And also, since the pandemic, certain trade lines that were reporting they're no longer reporting since the pandemic. So I want to make sure we get you exactly what you need for that. Any other questions?
I've got a couple questions, Jeff. So when someone offers a settlement on a debt, if you have a negative, if you have something on your credit, and this is something that's come up in my past, I've pretty much gotten rid of all negative items on my credit. But in the past, I was offered a settlement, and I didn't take it because I didn't know how it would show up on my credit profile. I'd heard that if you either can get them taken off like you mentioned, or just pay it in full. What's your thoughts on that?
Great question. I talked to so many people they just believe that if they just pay an old debt, old collection that's on their credit profile, that it will clear up their credit profile. And that's not always the case. I mean, so frequently it's not the case. You have 2 issues when it comes to those debts. Number one, you have the debt itself, and then you have how it looks on your credit profile. So what we do is we focus on helping the credit profile look favorable to lenders by helping you get to 0 negative items. Okay. The debt still exists. You have a written legal contract. So at any point, they can pursue you for the debt, sue, all that, right? But as far as your credit profile, making that look favorable, looking good to lenders, getting that removed, unless they're threatening garnishment for most items, it's better to have, I recommend disputing that negative item off your credit profile. I'm not telling you not to pay debts, right? But recommend disputing it off your credit profile first, and then you can decide if you want to pay it or not. That's between you and God, right? But the reason being, because a lot of times what happens is when you pay a debt, it does not come off your credit profile. Okay. The other thing that happens is when you pay those debts, even worse, it drops your credit score. And the reason is because older negative accounts hurt your credit less than newer negative accounts. When you pay on an old account, they add remarks and it freshens your account up and makes it look like it's newer, so it drops your score. I had a client, Willie, right? Willie didn't listen. He said, I'm just going to pay it anyway. I said, okay, you do it. Dropped his score, right? Dropped his score. He was right there at 700. He was going through another round of disputes. And then when he made that payment on that particular debt, it dropped him about 28 points. So if you are adamant about paying the debt before it comes off your credit profile, that's fine. Here's what you're going to need to do. You need a written agreement of deletion letter. Okay. Basically, you're going to contact that company, which again, I probably would dispute it, but if you want to contact them, and whatever, the first thing you need to understand is do not verify that you owe that debt. All right. All right. So don't call in and say, hey, I'm calling about this $3,000 medical bill that I owe you. You don't want to say that. All right. Because under the Fair Credit Reporting Act, the companies you owe have to verify that you owe the debt. Well, if you call in on tape and say, yeah, I'm calling about this $3,000 medical bill that I owe you, you just did their work for them. You verified the debt for them. All right. So the verbiage is, I'm calling about this $3,000 medical bill that you say that I owe. Okay. All right. Legal verbiage. All right. Then, and then ask, hey, listen, if I were to pay that in full, if I were to pay this debt that you say that I owe you, all right, can I get it in writing that you will remove that from my credit profile from all three bureaus? All right. Can I get it in writing, like mail, email, that you will remove it? Okay. Also get the name of the person you spoke with, first and last name, badge number, ID number, all that. So it can be verified. So if you pay it and it is not removed, right, we can trace it back. Okay. Settlement. You asked about a settlement. Usually with a settlement, they're less likely to take it off your credit report. They're going to want you to pay it in full, but it does happen. But for the most part, if it's a settlement, they're more likely to deny the written agreement, a deletion letter. Okay. Yeah. So hopefully that answers that question.
Yeah. Anybody else have any other? I've got like two more. I'm gonna wait for our other folks.
There's nothing in chat, and there's nothing in chat on Facebook.
I see
Okay.
Carletta raising her hand.
I think
That may have been when you asked to raise the hand.
Oh, okay. Okay. I just okay.
I will speak. I'm not Jeff Johnson, but I did go through the experience of establishing business credit through Dun & Bradstreet. For those who are inquiring about the business credit, that's probably the biggest database of business credit, and they're kind of like the mafia. They want you to buy their products so that you can see your credit rating and you can manage your business credit. But I think a lot of that depends on your suppliers and people you're buying from, if they're even reporting to Dun & Bradstreet. So that's kind of what I know about the business side of credit. And I did have something on there at one point that I had to dispute, and it finally came off, which was great. But I'm gonna let the next question go from our audience, and then I've got another question or two.
Okay, Carletta said, how do you keep accounts off your credit once you paid it off? Once you keep it off? Carletta, what do you mean? Are we able to unmute her? Or?
Yes. She should be able
Carletta,
to talk.
can you hear?
Yes,
How you doing?
finding you.
Oh, I'm incredible.
I paid an account off, right? And it went off. It took it off, but it first had it like paid in full, but then they took it off. But then it came back on there saying charge off.
Okay.
So I was wondering, how do you, because I have the letter, because I had them send me a letter saying that it was paid in full. And of course, they did send it to me, but it went away. But like in 30 days, it came back. So it dropped my score like 3 points
Mhm.
for putting it back on there, but it's paid in full.
Right. Yeah. So once you paid the money, that's why I said get that written agreement or deletion letter before you pay it. That stating that once it's paid, this comes off my credit report. Because
So
once you
submit that letter, do I submit it back as a dispute showing that I have that letter?
Yeah, so now it's time to dispute it, because once you've already paid, they have no incentive to just magically remove it for you. So now now it's time to dispute it and leverage the Fair Credit Reporting Act to get that particular negative item, see about having that removed.
Okay, and then I have another question. I'm sorry.
Go ahead.
So I purchased a car like 2 years ago,
Okay.
and they of course they hit like 12 banks. So now what I'm facing is, because like it's got a time, it says come off in 2 years or whatever. But isn't there a way, like, because only one bank, I got it from one bank, but the other 11 is still on there. Can you not dispute those and have those off, or I have to wait?
Yes, you can. You don't have to wait. If you have an account, if you have an inquiry tied to an account that is not open, yes. Now you don't want to dispute the inquiry tied to the account that is open, because you don't want to, like, if it's a car, you don't want that bank to say, hey, go get the car back, that was fraud. Okay. But for the accounts that were not open, yes, you can dispute those. Typically, when you go to the dealership, they're going to run your credit 7 to 15 times on average. Sometimes I've seen as many as 30.
Me
A
too.
lot of my clients, they have accounts with credit unions, and when your score is higher, you usually you go to a credit union, you get auto financing. They run your score once, they run your credit profile once, and then you can just take that check to the dealership and then pick out your vehicle. That way you avoid getting all those extra inquiries which drop your score. So that's just kind of for future reference. But yeah, those inquiries can be disputed. Absolutely.
Okay, thank you.
Absolutely.
You have any other questions?
Nope, that was it.
That was a good one, because I just recently bought a truck. Bought it in a business name, but banks use your personal credit. If obviously if you got a negative on your business credit, then that might put a halt into it. But what I did, Carletta, is I went to the bank that I already had established business credit with, and just so I would avoid that multiple inquiries that car lots do. Even though I could have done it in my personal name and gotten a little better rate, I did it in the business name, one, to help establish more business credit, and then two, it helped me avoid putting it on my personal credit profile as well. But I've got some other questions if we got just a couple more minutes. If others have questions, I want them to go before me.
Well, I want to ask you a question. When you went to go put your car in your business name, because that's what I tried to do, and they said I couldn't put it in my business name. So how did you go about? Yeah.
The right bank. I'm sending people to a certain bank right now. If the credit score is there, it's automatic, and we do have a webinar coming up with, and we hope to have representatives from some of these banks. But I do have a bank that they're pretty much they will run your credit, but if they're looking for the rating, quite frankly, I'm not sure how much profile they look at, but I've sent 3 people there, and they told me what their credit was up front. I said, yeah, go talk to them. And the next thing you know, they said, yeah, I got my line of credit, I got my vehicle, or what have you. But banks practice differently. So we hope with our banking webinar that we can bring in some banks that are easier to work with when it comes to lending like that. And I actually discovered one, and now I'm sharing it with other contractors and people that I know. So just different practices.
All right. Thank you.
You're welcome.
Donovan, you can mute me now.
Any other questions before I take over? I only got one more
I'm
question.
good. I think I'm good.
And everybody might want to know this one. I'll do this one first. So I use Credit Karma to kind of monitor my credit and so on. Jeff, do you have an opinion, or do you know where they kind of stand with their ratings that they typically display for you? Is that percentage
Yeah,
up or down?
so there are multiple different institutions that have some type of formula for your credit score. There are also two main types of scores. There are FICO and there are Advantage scores. FICO is, what are used by companies and, different industries to evaluate you for, financing. Vantage is more of an educational score. Credit Karma uses the Vantage model. All right. Okay. So people say, well, Credit Karma is wrong. It's not wrong. It's just an educational score. All right. It's cheaper to run. Credit Karma is not a credit monitoring site. They're a credit marketing site. They give you some education about your credit, and then to bring you there to offer you those credit cards that they have agreements with the companies that offer them. Have high fees because they know you have a lower score. But it's not wrong. But again, if you stick to the data points that I gave you, 0 negatives, 5 active accounts, credit cards and loans, 1 to 7% utilization, average age 5 years, no more than 3 inquiries, your credit score should be trending up on all models, even on Credit Karma or even on the FICO scoring models. So you can kind of look, now that you know what to look for, or know what's what to target. You can look at that when you go to your Credit Karma. All right. So if you're not at 750 plus, okay, let me look at my payment history. Do I have 0 negative items? Does it show any derogatories, any delinquents, any collections, any late payments? Does it show 100% on my Credit Karma? Okay, it does. Okay, so it's 100%. Great. Okay. Next, how many open accounts do I have? Does it show 5? Okay, great. Next, what's my utilization? Is it below 7%? Okay. What is my average age? Is it 5 years or more? How many inquiries do I have? Does it show me with more than 3? So you can kind of identify if you're not quite where you need to be, why. You kind of use that checklist based off those data points.
Okay, thank you. And any other questions coming before my last question?
Go ahead, shoot.
I'm getting my money's worth, Jeff, today. Sorry, but so recently my mortgage bank, the bank that I have my mortgage with, just got bought by another bank, and now, I mean, right now, my at least on Credit Karma, I may need to check the bureaus, but right now it says I don't have a mortgage right now. Have you experienced that, or know what's going to happen there with my history that I've built up with the other bank, or what have you?
With my personal clients, no. I do know that those companies, they do have to pay to report, so that the company that bought it, they may not have updated their records or made the payment yet. So that's probably the issue at this point. They haven't paid the bureaus. I mean, the bureaus make a lot of money off these companies. They make money when you send a dispute. They charge the companies that you owe for the dispute. Oh, wow. So it sounds like they haven't, I guess, updated the records, or they hadn't paid to report that information.
Gotcha.
They will, especially if things get tight, or the account goes delinquent, to light fire under you, they report to the credit bureaus whether you paid on time or not, to make sure that you're continuing to pay on time. So
if my history is not there, because it sounds like history is very important, would I be able to dispute that if they start me from ground zero with my history on my mortgage?
Well, if there's no history there would be nothing to dispute. I would contact the bank and ask them, are you reporting to the bureaus? And if it's not currently, when are you going to report to the bureaus? But they should be. It just sounds like there's some, I guess, exchange of info that hasn't been updated yet.
So I guess the 10 years that I've paid, should I be asking for that to be placed on my bureau?
Yeah, absolutely.
Okay.
I'm asking. I make that call because I want my average age at 5 years plus. So 10 brings everything else up.
Gotcha.
So,
Okay. That's my last question, folks.
Any other questions?
We do have a chat from Carletta stating that she paid her car off, but it had 3 late payments. Can those be removed?
Yes, they can be disputed. Now, I will say this, 1 or 2, let me say this, before the dispute, you can do what's called a goodwill letter, and you can just Google goodwill letter. Basically just saying, hey, something happened, my info wasn't updated, I lost my job for a month. In goodwill, can you, I'm caught up now, in goodwill, can you remove that late payment? Never happened before, never happened again. You'll ask for you call into the company, ask for the CEO's address, and they'll just give you some designated address to send those type of letters. And then you'll send that. If it goes over 2, that it gets very difficult for the goodwill. You'll probably have to dispute it. And late payments are some of the hardest accounts to dispute to see if it's having removed. Okay. And then the good part in your situation, Carletta, is the car is paid off. So if the car is paid off, it's what we probably would do is just dispute the whole account itself. If it was open, that would be tricky because that's one of your 5 active accounts. So you have age with it. So let's say this is your 5th year and it's open. You don't want to lose the age right away. But since it's already paid off and that's dropping off anyway, I would just go ahead and dispute the whole account because those lates are harder to get removed than some of the other negative items like a medical bill. So.
All right.
I learned a lot in this.
Yes.
My only question, Jeff, is my last question is, will you do this again with us later in the part of the year?
Absolutely. Love to anytime.
Okay.
My goal is to help a lot of people with their credit and finances. So yeah, absolutely. Spread the word.
We really appreciate you.
If anyone has questions, you can reach out to me as well.
Thank you. We appreciate your time and expertise.
Definitely. And I will be putting together kind of a Q&A form to kind of give some information about what has been discussed today to share with our participants. So I will probably share that with you to just give you a quick review and feedback on it before I send it out, Mr. Johnson.
Okay, perfect.
Awesome. And again, thank you guys for joining us here at the Plan Room to share some valuable information to our business community on how we can best operate and do business and grow our business and scale up. And so I'd like to thank Mr. Johnson for sharing this valuable information with us. I'll be writing up a Q&A sheet to share you guys with the speakers here today, myself, Mr. Dunn, and Mr. Johnson's contact information if you guys may need it. And look out for our next webinar. We'll be having a webinar on banking and financing for contractors. And so we would like for you guys to participate. I'll say how we can best build our banking relationships to build our business. We'll be in touch. So if you guys would like to get in touch with me, I'll be here at the Plan Room at 1815 West Broadway. You can reach me by email, dtaylor@onewest.org. Thank you guys very much, and we'll be adjourned at this time.